Hello everyone, welcome back to my channel. So in this video, as I mentioned in the previous one, we are going to talk about a very interesting and scary phenomenon that is going on at the moment in the markets about surrounding the run-up and the aftermath of Nvidia's earnings that happened earlier this week on Wednesday. And so basically what I want to show you is that there are, in my view, some causes for concern in the situation of the market when it comes to the earnings of AI companies, the whole AI hype that is associated with it, and what impacts can have on a market. To make this point a clear one for everyone to understand, you can see here, looking at the trades that I did this week, and I'm sure you can see the date and the time at which these trades were made. And if you look here, and let's look here on August 27th, on Wednesday, and as you can see here, I managed to sell, as I mentioned in the previous video, I managed to sell 4 puts on the QQQ with a strike price of 568 with a 95-cent premium. I'm going to duplicate here the page because I think this gives you a better picture of what we are actually talking about here. So opening up the QQQ here, and if we look back at the point of opening the the, of the trading day on Wednesday, so we are talking about the 27th here. Let's see what it is. Yeah, so here we are, very close to it. Yeah, this is where it began. So as you can see here, when the trading day commenced on Wednesday, the stock opened at around 571. All right, and by being by selling a call on by selling puts with the 568, we are talking about the put which is located below about 3 points in the strike price, below the strike price. So this is a quite conservative put, and so in theory this should have a low premium because it's far some way below the strike price. I believe I may be able to open here. Let's see here. I'm not sure if I recorded the probability of the trading, the probability of profit. Uh, no, I did not. Wait, no, I did not. I failed to record it. But it is a quite conservative one, and so this should be about a 90% trade probability of profit, meaning because it's so far out of the money, uh, this should not have this much premium theoretically. All right, and then as we sold, as we bought back this put, and at the end of the day, you can see here that we still managed to get $1.78 by selling these puts in the dying section or dying seconds of the section, and the puts that we sold before at the very end of the section of the trading session were still trading at 40 cents. And keep in mind the price at the end of the session, right? If we look here at the price at the end of the session, the price was trading at around, as I mentioned in the previous video, at around 573. And this is a huge difference because with the stock price of the QQQ trading at 573, and the fact that the puts at 568, so 5 points out of the money. So this is clearly deep out of the money put, still trading at 40 cents a piece in the dying seconds of the session. This means that the market was really bidding up the prices of the puts, and so there was a big concern that the whole market, and keep in mind, this is the day of the Nvidia earnings, but this is not the Nvidia stock. The QQQ is a stock that, as we all know, tracks the Nasdaq-100 index. And so what the market is basically saying is that we are concerned that if Nvidia falls short of its earnings expectations, the entire market will come down, and will come down in a big way. All right. And this put still $1.78 in the dying sessions of the market, and is still out of the money put, because the price, keep in mind, was above 573. All right. And in here we are about 5-6 minutes away of the earnings being released after the market is open. And so this tells me and that uh, is the market is being absolutely dominated in terms of the expectations of its development, whether the prices of the entire market come up or down, based on the results of a single company. Of course, it's the biggest company in the index at this moment, but but this tells me that the AI hype and has completely taken over the market prospects. And another example of what I can show you is that here, this is I'm going to minimize here so it can be seen here. All right, now, oops, let's push this a little bit further down like this. All right, so this is a print screen that I took from the trader workstation of my current broker. And as you can see here, this is the implied volatility for the QQQ over the month of August. And there are three especially high volatility events here. August the 1st, because this was the day that tariffs were supposed to be taking effect by the US administration. This high volatility day was also because Fed Chairman Jerome Powell was scheduled to deliver a speech in the Jackson Hole Symposium. So investors were very under the expectation that he would tell something that would tell us about the direction of interest rates in the future. And then the third one, it's not as big as the other one, but um, it's in here that it's the Nvidia earnings. However, even though this is the implied volatility of the QQQ, on these days uh, we did not manage to get as much premium as we managed to get as in this one. So even though the implied volatility is lower, the premiums were rather comparable, but in the same ballpark. But in, in many cases, you can see that the significance of these events, which would in theory make sense because knowing about what's going to happen to tariffs, or the imposition of tariffs, and what's going to happen to the future, to the interest rates in the future, these are events that we understand because they impact the entire market. But this is just the earnings announcement of a company which happens to be in the AI sector. And apparently it has enough significance to be able to move the entire market. And another example here, as you can see, this is the option volume for puts and calls on August the 28th. All right. So for the very next day. And so here you can see that the puts and calls that are being which have the most volume are the ones that are pretty much far out of the money, the puts, because here you can see 538, 548 strike price when the price is around the 700 and 570, and the calls that are being traded the most are the calls with the strikes of 589, 590, and around 600. So investors were clearly expecting a very big move following following because this is August 28th, following the Nvidia earnings. And so this tells me, and I cannot emphasize this point enough, is that because we are seeing this massive price in premiums for the QQQ options, and again, this is not the Nvidia options, these are QQQ options, um, we are seeing that the Nvidia at this point has completely taken over the Nvidia. The sentiment about the Nvidia and what happens to the Nvidia has wide-reaching repercussions across the entire market. All right, and for me, this brings us to the second to the main point of this, which is the AI hype cycle. I think we have reached a point in which the AI narrative, and which is being led by companies, by a handful of companies like Nvidia, has become a market-wide phenomenon. And this is just about one company's success. It's about the market's belief in this paradigm shift in which Nvidia is a clear leader in the hardware that powers this shift. And as a result, I think because an enormous amount of capital has flowed into a very small number of stocks and the subsequent concentration, market concentration that coming with it, we see that these companies, and not so much the others, but Nvidia has the potential now to completely swing the market in one way or another, depending on uh, on its earnings announcements and anything that um, that happens to the company. And so I think that we need to be very aware of this reality. And I think we have reached a point in which the AI story has become so big, so important that any performance from these companies, especially from Nvidia, that is seen as less than outstanding, all right? And even if it falls short by a little bit of the expectations, this could cause a significant market correction. And because we can see here Nvidia, here stock, let's see here, and if we look at the fundamentals, the company, according, for example, to Morningstar rating, of course, it is what it is. It's just an opinion, but it is a 3-star, meaning it's currently fairly valued. Uh, now, notwithstanding the fact that it has an uncertainty very high, but it's a bit above market price at this moment, 173, and the fair value is about 170. Of course, again, it's a Morningstar rating, just like any other rating. But any less than outstanding or expected business performance will be seen as a question mark about whether this hype is actually worth it or not. And this has the real potential to cause a market correction, if not a small crash. Um, because the market is at this point tied very is tied or associated with with a single narrative, which is the AI narrative, basically, and this can cause, of course, a chain reaction of selling as stocks basically are being sold because the investors finally realize that stocks are very expensive at this point, especially when it comes to AI. Um, and to put this into context, this is we can see some parallel to the dot-com bubble of the late 1990s that eventually burst on March 2000 uh, because of the advent of the internet. But um, what we are seeing basically is the same sort of pattern, the same sort of build up, all right? Even though, of course, it was a completely different situation back then because most of internet companies had simply no profit, but Nvidia, as you can see, is very much a profitable company. But what we are seeing is that too much faith and too much expectation is being put on a single story of the market, which is the AI. We are not in a one-to-one on a completely equal parallel, but the dynamics are similar, in which we are seeing a powerful narrative driving this immense speculation and market concentration, right? And seeing this happening, it's of course it's a cause for concern. I'm not sure if we can see here the weightings. Let's see here. Performance holdings. Yes, I think we can. All right. So as you can see here, the QQQ only has 10% of its holdings on Nvidia, and yet it's the largest holding, no doubt. You can see the Magnificent Seven here, um, along with Broadcom here. But nonetheless, 10% of the QQQ shares being able to influence the entire holding, the entire stock of QQQ is something that we need to be concerned about. Um, of course, this is something that we really need to be aware of, and the market is basically riding or and fully relying either on the success or the failure of this story, the AI story. And so we need to be aware of this and trade very carefully, because of course if this ends up being another overhyped situation, overhyped story, yeah, things may go ugly in the market, and so we need to be prepared for that, because I think at this point it is pretty much irreversible. We reach a point of no return, that this story is here to stay, and its development uh, will be will have a profound impact on the market, and there's no way that we can reverse this at this point, unless of course the hype goes away and there's a significant correction in the market, because investors may realize, oh, perhaps this is not what we thought it would be, like it happened in the beginning of 2000 with the internet hype. But yeah, this is what I wanted to share with you guys. So we need to be careful about this, and yeah, this is it. So feel free to leave your comments in the comment section down below. Also, I'm available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel. And yeah, I'll see you all in the next one.